Marico's Q4 FY20 performance came broadly in line with street expectations. In our ideas for profit today, I will discuss whether investors should look at adding this essential consumption business to their portfolio. Now, the company's domestic business, which actually constitutes 77% of its total sales, especially the hair oil category, including brands like Parachute, have got severely impacted during the lockdown. Domestic business saw a volume decline of 3%. Silver lining was also seen in Saffola oils and food business. Now, higher growth in these segments was due to households stocking up on food and essential items in the early stages of COVID-19 outbreak. Now, Marico's international business, which constitutes 23% of the total sales, declined by 6% in Q4 FY20 in constant currency terms due to the consumption slowdown and the COVID-19-led restrictions affecting growth in overseas markets. Now, Bangladesh and Vietnam fared quite well due to the limited COVID-related restrictions. However, Middle East and North Africa, also South African markets, were hugely impacted. Now, overall Q4 financials saw sales decline by 7% year-on-year and 18% sequentially. Gross margins improved to 49.3% in Q4 FY20 as compared to 49.1% in Q3 on the back of lower raw material costs. Now, EBITDA margins improved by 60 basis points on a year-on-year basis on the back of 18% reduction in advertising expenses and 8% reduction in the employee costs, while management updated that India plants are now running at about 70 to 80% of the capacity and about 75% of the distributors are also open. Challenges to the company and FMCG sector are multifold even now. Firstly, challenge is in terms of the supply chain or logistics. Trade inventories have thinned out. Trade receivables cycle have extended to 26 days from 21 days in FY19. Focus has shifted to product availability to existing customer base rather than efforts towards the increase in market penetration. Now, company aims to reduce investments in premium categories and also channelize investments to value segments. Focus as well as shifts to the newer categories dealing with health, hygiene and nutrition. Now, new launches for categories such as sanitizer and fruit and vegetable cleaning solutions also appear a timely intervention. In the near term, the company's performance would definitely be impacted due to the weak category growth for hair oil products, which constitute 62% of the domestic sales. Weak trend is in line with the demand for other personal care products in the FMCG sector as well. Now, as the company has a slight bearish outlook for the copra prices, another round of price cuts is also possible, and this may help in defending the market share for the company. Now, as far as the valuation is concerned, the stock is trading at 34 times FY20 to estimated earnings, which is at a sharp discount to the peers such as HUL, Dabur and Britannia. Further, strong operating margin profile and also the working capital strength and brand equity in key portfolio gives us the confidence that company would be able to improve upon its market share in the interim. Now, the adverse impact of COVID-19 on the economy is definitely expected to be larger than the earlier anticipated impact. Fund flows into select defensives would continue, wherein risk reward is quite favorable. Hence, we do believe that investors can consider this opportunity in a staggered manner on declines and accumulate the stock.